Hi, welcome to the Aussie Property Hub. In early 2023, Australia's construction industry crossed a line it hasn't been able to step back from. Porter Davis Homes, at the time the country's 12th largest residential builder, collapsed with almost no warning. More than 1,700 homes were left unfinished. 779 families had signed contracts and paid deposits, many worth well over $100,000. And overnight their builds stopped. What first looked like a single high-profile failure quickly became the opening chapter of a much bigger problem. Over the next 18 months, another 3,217 construction companies across Australia went under. That's roughly 8 builders collapsing every single day. Then in March 2025, something happened that changed how the industry viewed the crisis. Roberts Co., a company backed by Andrew Roberts of Multiplex and widely seen as a stabilising force, also collapsed. This was a firm that had stepped in to rescue failed projects, absorbing losses in an attempt to keep the system moving. Even with extraordinary personal wealth behind it, Roberts Co. recorded losses of more than $60 million. If a company with that level of backing can't survive, it forces a hard question. What chance does any ordinary builder have? The numbers make it clear this isn't a temporary downturn. According to ASIC insolvency data, 1,793 construction firms collapsed in 2022. In 2023, that jumped to 2,546, a 42% increase in just 1 year. By 2024, the figure rose again to 3,217. The first 3 quarters of 2025 are already running 24% higher than the same period last year. In the 12 months to March 2025 alone, 2,636 construction companies became insolvent for the first time. These aren't businesses struggling to stay afloat, they're businesses that are gone. In just 2 years, between May 2023 and May 2025, more than 5,000 construction companies collapsed across Australia. Construction now accounts for 27% of all corporate insolvencies nationwide, a share no other industry comes close to. Veteran builder Scott Chalon has warned that another 1,000 companies are likely to collapse in the next 12 months, taking subcontractors and suppliers with them. His message was blunt: the industry is heading towards something much worse. For homeowners, this crisis isn't theoretical. When a builder collapses mid-construction, the impact is immediate and brutal. Families spend years saving, sign contracts in good faith, and watch their homes start to take shape. Then one day the phone rings and they're told the builder has entered administration. Work stops instantly, trades leave. Half-built houses sit exposed to weather and damage. When homeowners try to find another builder to finish the job, they're hit with quotes that are 30 to 40% higher than what they originally agreed to, simply because costs have exploded since the contract was signed. Material prices tell part of that story. Timber has risen by around 40%, steel by roughly 35%. Skilled labour has become scarce and expensive. Domestic building insurance offers limited comfort. In many states, claims can't even be lodged until 5 weeks after a builder becomes insolvent, and payout caps can be as low as 20% of the build value. In the Porter Davis collapse, many projects weren't properly insured at all, leaving families with little to no protection. Insolvency specialists who worked on Porter Davis, ProBuild, and other major failures have described the same pattern again and again. Too many incomplete projects, funding gaps that can't be closed, and consumers left exposed once the company fails. The roots of this crisis go back to the COVID period. Between 2020 and 2022, the federal government introduced the home builder stimulus, offering grants of up to $25,000 to encourage new home construction. Demand surged almost overnight. Builders signed far more contracts than they normally would, in some cases several years' worth of work in a single boom. But nearly all of those contracts were fixed-price agreements, locking in build costs long before construction actually began. Many of those projects didn't start for 12 to 18 months. By the time they did, the cost base had changed completely. Industry experts observed builders facing material and labour costs 30 to 40% higher than what they originally priced, while operating on margins of around 10%. The maths simply didn't work. A home contracted for $450,000 could now cost $540,000 to build. Instead of making a modest profit, the builder was locked into a significant loss and still legally required to finish the job. When that situation is repeated across dozens or hundreds of contracts, collapse becomes almost unavoidable. Fixed-price contracts were only part of the pressure. Global supply chain disruptions made materials harder to source and slower to deliver, pushing projects months behind schedule and driving up holding and interest costs. Labour shortages caused by border closures stripped the industry of international workers, leaving enough qualified tradespeople to fill only about half of available roles. Cash flow became increasingly fragile, with builders paying for labour and materials up front while waiting 60 to 90 days for progress payments. A delay on just one project could quickly ripple through an entire business. When a major builder collapsed, subcontractors were often left as unsecured creditors, many receiving nothing, which then triggered further failures across the supply chain. The collapse of Roberts Coas in 2025 exposed just how deep these problems run. After ProBuild failed in 2022, Roberts Co stepped in to rescue major developments, with Andrew Roberts personally funding losses in an attempt to see projects through. Despite absorbing massive cost overruns and dealing with subcontractor failures, the economics never improved. The company ultimately collapsed with losses exceeding $60 million, including more than $56 million on the Amazon Craigieburn project alone. If even a billionaire could not make these projects viable, it shows how fundamentally broken the system has become. What's striking is that these weren't inexperienced or poorly run companies. ProBuild collapsed in 2022 with $250 million in debts. Porter Davis left 1,700 homes unfinished in 2023. Lloyd Group's failure disrupted dozens of government infrastructure projects. Stellar entered administration in 2024, despite a $32 million cash injection. Project Coordination, with more than 50 years of history, owed over $25 million when it failed. Ian Cubitt's Granny Flats froze more than 120 projects across NSW and the ACT. Roberts Cobias, despite billionaire backing, collapsed in 2025. Different businesses, different markets, but the same outcome. Despite all of this, the policy settings that helped create the crisis remained largely unchanged. Pandemic-era stimulus drove demand without increasing industry capacity. Fixed-price contracts are still the standard, leaving builders exposed when costs surge. Experts have called for greater flexibility in long-term contracts and better risk sharing, but meaningful reform has yet to arrive. Master Builders' forecasts now show a shortfall of around 166,000 homes against government targets over the next 5 years, largely because builders keep disappearing. For consumers, the risks remain uncomfortably high. Deposits paid to builders are not held in trust and are not protected like bank deposits or legal trust accounts. When a builder collapses, homeowners are treated as unsecured creditors, competing with subcontractors and suppliers for whatever assets remain. Researchers have pointed out that building or renovating a home is one of the biggest financial commitments most Australians will ever make, yet it offers some of the weakest protections. In just 2 years, more than 5,000 construction companies have collapsed across Australia. 8 failures every day, families left stranded, small subcontractors wiped out, and even companies backed by immense wealth unable to survive. This isn't just a run of bad luck or poor management, it's the result of a system that no longer works. Here at Aussie Property Hub, we'll continue tracking builder collapses, policy decisions, and what they mean for homeowners and investors. If you're thinking about building, understanding these risks is no longer optional. The real question now isn't whether more builders will fail. It's how many more will collapse before the system finally changes. Don't forget to subscribe and press the bell icon for more informative videos.